Hi, welcome back. In this segment, we're going to talk about what happens after we're through everything else. So, you wrote your offer to purchase, we've been through our inspections, we've come to an agreement with the seller, everything that you put in that amendment is going to be fixed, and now you've got to wait for closing. We put the closing date on the offer to purchase, but now what you need to do is you need to get together with your lender. You need to order what we call the appraisal. And let me clarify, appraisal is different from assessment. The assessment is something the municipality does. The guy from the municipality comes out, looks at, this is what the house is worth. Okay. The appraisal is something that is ordered by your lender. And you do pay for it, by the way. But what happens is they send somebody out, it's usually a third-party person. The lender doesn't know who's coming. They don't want to worry that favors were done or anything like that. And they come through the house and they make sure that the house is worth the amount that you offered on it. And they have to let the bank know that. And generally, the assessment comes back at or just above what you offered. If it comes back below what you offered, well, then we got to work with the seller and figure it out. If it comes back pretty high above what you offered, that's good. That means all of a sudden you already have equity in that house when you close. The appraisal takes approximately 10 to 15 days to get back, depending on who your lender is and how quick they are. The loan process is basically a lot of back and forth, sending the same documents over and over again to the lender, and you just keep doing it because you don't have a choice. I will caution, however, while you're in the middle of this process, do not go and buy a new car. Do not go buy a new refrigerator. Do not take out a new credit card with a $20,000 limit. Don't do anything that's going to goof up your debt to income ratio. Make sure you do not quit your job. That's number one. If you lose your job, you must report that to your lender immediately. If you don't, that's one of those times you can lose that earnest money you put down that we talked about a few segments ago. When you put it down on how sincere you are in your offer, you have to keep doing everything in good faith. If you know that you lose your job, you have to let the lender know you lost your job. I had a buyer. She got fired, I think it was 2 weeks prior to closing. She didn't tell anybody. We had a hard time getting her earnest money back. She lost half of it. So even if you hate your job, don't quit your job when you're in the middle of this process. You want to keep everything moving smoothly. Do not go on you can go shopping. I've told people they can't go on honeymoons, but usually the lender lets them go. You just want to make sure you try and keep your finances where they were when you started this process. There are certain things you can discuss with your lender. He's going to talk to you about down payment, the different types of loans, which you'll have already gone through when you got that pre-approval. He'll talk to you about an FHA loan, which is a insured loan by the government. You only need 3.5% down for an FHA loan. Or you go for a conventional loan. You need 5% down for a conventional loan. You have a VA loan. You don't need any down payment with a VA loan. And these are all things you'll discuss with your lender as you go along. You may even start with one loan program and change to another. Lenders offer different loan programs. So basically that's what you're thinking about with appraisal and financing. And yeah, they will ask you for the same documentation over and over again. And they will check your job status 48 hours prior to closing. So keep that in mind. Whatever you do, they will know. Thank you for watching. Subscribe to our YouTube channel and let Kraus find your perfect house.